let's get this thing kicked off.
Okay, so let me give you guys who do not know, so just a quick introduction. I am Karin Christ, the owner, founder, and CEO of KPC Financial, but you guys are going to get to Jay's expertise today. And Jay is a CFP, a certified financial planner, and he's been a planner here at KPC. He helps clients navigate retirement planning, investment management, and long-term wealth strategies. So, beyond working one-on-one with a lot of our clients, Jay works as a team. He jumps in with all of our clients. We all work as a team as we're providing solutions for our client. But Jay is also actively involved in the firm's investment research and constructing portfolios, focusing on identifying long-term opportunities while helping clients understand the risks that come with those opportunities and investments. So, Jay, in his previous role, helped other wealth managers design portfolios and understand risk mitigation. And we are very, very happy Jay is with us. And you get to enjoy some of Jay's expertise today.
Thank you, Karen. And yeah, we're pretty excited about this here today too, and to bring this information to you guys about, I think, one of the most talked about subjects, especially in regards to investments, right? And that's the AI trade. Okay, and I know, the question, is it over? Is it just getting started? Right? Is a question that people are always asking. And today our goal, right, is to not make a prediction about what happens next week or next month, right? It's really to separate, the technology from the investment story and look at what's actually driving the market and discuss this theme and how it fits into a well-built financial plan. And always, this information today is educational. And if you guys visit our website, right, under the events tab, and that's www.kbcfinancialsolutions.com. Under the events tab, you can find upcoming webinars, and you'll be able to see some of the educational content, that we put out. So we've got another one on September 9th about long-term care planning that we're really excited about. But let's dive into this webinar today, specifically on the AI trade, okay? And I am going to launch some polls, so I ask that you guys, participate with me. That helps us make this a little bit more tailored to you. So, we're really going to be walking through, four things today, right? We're going to talk about the technology, and the adoption rates of AI. We're also going to be looking at the evolution of the AI trade, okay? We're going to talk about CapEx and spending, really some incredible numbers there. And then we're also going to talk about the earnings, okay? Because eventually that is what drives the market, okay? So before we dive into that, allow me to launch a poll here with you right now. Okay, where do you stand? And hopefully you see that poll pop up. Where do you stand on the AI trade today? Okay, do you think that the opportunity is still early? Do you think that evaluations have gotten ahead of themselves? Maybe you're invested but want to understand the risk, or maybe you're not sure what to think, and that's why you're here today. So I'll give you a little bit of time to answer that poll question. And keep your answer in mind, because I want you to see whether your answer changes by the end of this presentation today. So thank you guys for answering that. I'm going to end that poll and we'll move on to the content here. So, this chart, and I'll walk us through it, but that light blue line is the adoption rate of AI. Okay. And so pointing it out, the important thing about this chart, okay, is that generative AI has reached approximately a 53% adoption rate within 3 years. Okay. So there is no doubt that this technology is here to stay with us, and it is being adopted very quickly. And so by comparison, right, computers took more than 20 years to reach 69%, and the internet took decades to reach a similar levels. Okay, so AI has spread faster, and a lot of that is because some of that infrastructure is already in place, right? We use computers already, smartphones, internet access, cloud-based applications. But the important thing and the takeaway from this slide is that AI adoption is real. It's happening extraordinarily fast, but rapid adoption does not automatically make every AI related stock a good investment. Okay, and investors are still going to need to determine which companies will turn that adoption into sustainable revenue. So let's take a look at this evolution of this trade in the market. So this timeline helps explain that, right? And in late 2022, okay, generative AI moved from the research level to everyday use. Okay, and in 2023, 2024, the market rewarded those companies that they felt were best positioned to capture that, right? And these are some of these mega cap tech stocks, or as the media will say, the magnificent seven. Um, then the story in 2025, right, and beginning of 2026, started to shift from the software excitement to the physical build out, right? Think about the chips, data centers, networking, memory, and power. And now we're really in that higher stakes phase, right, where the spending has become so large that the market needs results. Okay, it can't just be potential. And the question is no longer, is AI real? The question is whether the economics can catch up with the expectations. Okay. And so I think a good framework for evaluating the AI trade is really looking and following the money. And so I split it into three segments here. Okay. And our first segment is those spenders of capital. Okay. These are the hyperscalers, the some of the largest companies in the world: Amazon, Oracle, Meta, okay, OpenAI, Anthropic. Okay. And these are the guys spending that capital. Okay. And they're investing hundreds of billions of dollars to build and manage the data centers and to create the computing so that AI can run. Next, you have the receivers of capital. Okay. And these are those companies that are tied to that AI and data infrastructure industries. Okay. Think about the memory companies, the networking, the computing power. Okay. These are the sectors and those companies that are the receivers of this capital that the hyperscalers are spending. And next, you've got the software or the disrupted sector. Okay. And these are the sectors, right, where people are looking at these companies and saying, hey, do they have some risk in terms of potentially being replaced? Okay. And these are companies like, Salesforce, Workday, ServiceNow. And they declined earlier this year on that fear. Now, whether or not that remains to be the case, if they're getting replaced or not, right, continues to play out. But the key point here is that AI exposure, okay, is not a single investment. Okay, the same build out that benefits one company can pressure another company, and it creates a very different risk for those companies that are spending money, okay, to build this out. Um, So that takes us to a little bit of risk question here, and I'm going to launch a poll for you. Give me 1 second. Our poll number 2. Okay. Now, what risk concerns you most about the AI trade? And select all that apply. Okay. Is it the stretch valuations? Is it the debt funded circular financing deals, right? Is it the power or infrastructure constraints? Or is it a possible slowdown in earnings growth? See some questions. The leading responses in this really, help me get a useful lens, and I think set up some of the other conversation that we have. So thank you guys for participating. Um, Give a couple more seconds here for all the answers to come in, and I'm going to shut this poll down and we'll move on. So I do see kind of similarly, there is a lot of risk in terms of the people are worried about that debt financing. Okay. And so this sets it up perfectly. Okay. The AI trade is often compared to the dot-com bubble. So I want to go through some of the similarities and really some of the key differences between the two. So looking at 2000, right, and I call this the revenue behind the story. Many of the dot-com companies had little or no revenue. Okay. And versus today, where we have a lot of these AI leaders that have profitable businesses, they generate significant cash flow. Okay. The businesses are stronger, but that doesn't mean their stocks can't become overvalued. Right. The other thing when looking at it or comparing it to the dot-com bubble is how's the growth being funded? Okay. And in 2000, the growth was being funded largely by equity issuance and IPOs. Today, it's increasingly being funded with debt and a new form of leverage to watch. Okay, so that introduces fixed payments and refinancing risk, right? If demand falls short. So that is a very key difference is how this is being funded. Now, who is buying? Okay, so in 2000, you had a lot of retail speculation being the major driver. Today, what we're seeing is large institutions are the dominant buyers of this. Now, that may bring more discipline, but look, sophisticated investors, okay, can become overly optimistic as well. And lastly, this is, I think, very interesting and not talked about a lot, is the concentration. Okay, in 2000, tech was large, but less dominant as a share of the index. Today, about 7 companies represent 1/3 of the S&P 500. Okay. So, today's AI market is not an exact repeat of the dot-com bubble, right? The leading companies do have stronger businesses. They do have real revenue. They do have substantial cash flow, right? But high valuations and increasing debt, as well as market concentration, still create meaningful risk. And so this brings us to our next kind of question is how much money is being committed to this build out? Okay. And these numbers might shock you. Okay. But it is projected in 2026 that global AI investment is over $1 trillion. Okay. And that's okay. Large US hyperscalers are accounting for a majority of this. Okay. And that demand, right? That amount of money going in creates real demand across different parts of the economy that we are seeing. Okay. Um, but what happens if demand or develops a lot more slowly than we expect? Okay. And this is where the story begins to move from the excitement about the technology, okay, to the return on invested capital. And this is another chart here that I think speaks to it very well. Okay. And I don't want you to focus on this is how much US hyperscalers are spending or guiding to spend in 2026. Okay. And it's around $700 billion. Okay. And what I want you to focus on is not the exact number, but the steepness of that change in their spending. Okay, because when spending rises this quickly, expectations rise with it. Okay, and eventually companies have to produce incremental revenue and profit to earn an acceptable return on their investment. So CapEx, look, it can remain a powerful tailwind, okay, for infrastructure providers in the near term. But for this broader trade to stay healthy, we need to see these companies monetizing that spend. Okay. Now, let's talk about that. Okay. So far, right, this is one of despite all the other news out there, earnings have remained very strong. Okay. And on the left side, what you're seeing is the S&P 500 EPS actual EPS or earnings per share versus the estimates. And so those lighter blue bars right there, of course, are estimates. Okay, so we have to be cautious about that. But as you can see, is they are very strong in terms of what is estimated in terms of earnings. Okay. Now, when I look at that right chart, this is our Q2 2026 earnings scorecard so far. Okay. And you can see that about 86% of companies are beating their EPS estimates. And then other number I want to focus on is that net profit margin. Okay, 16.9% is far above the historical average. So it is not just AI and technology companies right now having strong earnings. Okay, we are seeing strong earnings across the market. And of course, a large portion of that is due to the fact that there is a lot of money in companies spending money in this space. Okay, so the market does and can tolerate higher valuations when profit growth continues to exceed expectations. It becomes less forgiving when those earnings are merely meeting or missing those expectations. And this is another chart that I want to draw your attention to. Okay, and what we're looking at is those yellow bar charts there. On the left side, we have the annual CapEx of different companies like Microsoft, Meta, Google, Amazon. And on the right, we have the Q2 revenue of those companies. Okay, so what you can see is you can see in 2026 on the left side there that annual CapEx is exploding from these companies. The good thing about that right now is we are seeing their revenue increase as well. Okay, but if CapEx grows much faster than revenue for an extended period of time, stocks are going to come under pressure. Okay, if revenue begins to accelerate as new AI services are adopted and monetized, then the spending can look a lot more reasonable in hindsight. So this is why, when you're evaluating this trade, you don't want to just ask yourself, is revenue rising, right? You want to ask, is revenue growth closing the gap with the amount of capital being committed? And that ratio and direction matters more than a single number. Okay. So really there's three ways, right? A reasonable investor can look at these things and come up, with the same facts and come up with a lot different conclusions. Okay, so the bull case, let's analyze the three ways to read the AI trade. The bull case is that, look, AI is a transformational technology. Okay, real revenue and profits are being generated. The productivity gains, okay, are going to increase earnings, and the infrastructure spend builds a durable long-term situation, right, where earnings can continue to grow. The bear case, right, is saying, okay, well, valuations assume flawless execution. Circular debt-funded deals raise financing questions, right? And any demand pause can really put a strain on these companies. Now, my approach, right, and my view here is that I think that both can be partly true at once. Okay, a technology, right, can be transformational, and a particular stock can still be overpriced, right? That theme can work out for years and still experience major drawdowns along the way. Okay, and so my point here is that for planning, right, we need to take a balanced view on this. We do not need to predict one outcome with certainty. We really need a portfolio that can participate without depending on the outcome. Okay, so when we're talking about, AI exposure in a portfolio, I'm going to launch another poll question here. And that is, let me get that up and launch that for you. That is your AI/tech exposure managed within your overall financial plan? Okay, one of that answers may be yes, we monitor concentration and rebalance it intentionally. Maybe it's somewhat, you have a general sense, but no formal process. Or no, you haven't looked at it that way. Or you're not really sure how concentrated your portfolio is. I'll give us a little bit more time to answer that poll. We'll talk a little bit about, I think, some of the things and the value of how you should look at this, right? So I'm going to end that poll and keep going here. But that takes us, okay, here are 6 practical questions I would use to evaluate AI exposure. Okay, first, you want to know what segment you own. Do you own those spenders of capital? Do you own those receivers? Do you own that disrupted software, right? Also, you want to check real concentration, not paper diversification, right? Remember, I said that a third of that index is made up um, of a few companies. Okay, you want to separate the technology story from the price story. Okay, again, watch the ratio, not just the trend this was talking about. Are they converting that spend into real earnings growth? You want to understand how the build out is being financed, and we talked about that today. But most importantly, okay, and if you take one thing away from this presentation today, this is it. Okay, size it to your plan, not your excitement. Okay, so our financial plan should dictate how much risk we can take, okay, and how much risk we should be taking. And I think that is so important, okay, because the AI trade is a theme, okay? Your plan is the strategy. And so risk capacity, or how much risk you can take, right, comes from your financial plan. Okay, if you're depending on portfolio withdrawals, okay, you should not be hoping on the outcome or have hope as a strategy that the AI trade works out, right? Diversification means more than just owning a lot of stocks, okay? And then no single theme should lead the portfolio. AI may be legitimate, right? And we're seeing that it's being adopted quicker than ever, but building a portfolio around one theme is a bet, not a strategy. Okay. So that takes us a little bit about what we do here and talking about the financial plan. Okay. What we do for our clients is we build a complementary retirement optimization blueprint. Okay. And today we're talking about the investments. And I do see a lot of other advisors out there, right, that just talk about the investments, but your financial plan is so much more. Okay. How much income do you need? Right? What is your amount of income that you need in retirement? How tax efficient is that income? Okay. How about healthcare planning? How does that fit into your overall plan? We're seeing healthcare costs rise, so you do need to have some growth in those portfolios. How are you going to fund long-term care if that cost in your financial plan? Are you selling investments to fund it? Do you have something that's maybe set aside that can help pay for it? And your estate and family legacy. So when we work through a blueprint, a retirement optimization blueprint with potential clients, we are hitting on each of these topics with our clients and looking at the full financial plan to help guide us making those investment choices. Okay. Now, you don't need every strategy, right? You need the right strategy. And so, as I talked about, and I'll launch a poll here in a second on how we can help you, but our retirement optimization blueprint, if you do not have a financial plan, okay, a financial plan, okay, is paramount to success in investing. Okay, so that leads me to our last poll here is how can KPC help you? Okay, and I'll launch this poll. But would you like us to run a full retirement optimization blueprint for you? Maybe you just want an investment portfolio analysis where we look at your portfolio, stress test it, and give you insight into maybe how concentrated or exposed you are to the AI trade. Maybe you just want to get to know us a little bit better and you just want a 15-minute clarity or confidence call, right? Or maybe you want to receive the monthly newsletter and event announcements. Okay. So if you would, please answer that poll for me. I'll give you some time. And I'll leave that poll up for now. And, again, I'll show the disclosure here at the end. Again, none of this is a recommendation to buy or sell a single security. Okay. And if you take away one thing from this presentation, okay, understand that a financial plan can help dictate, right? Your should dictate your investments, not the other way around. Okay, not a theme. So I'll put this back and if you answered that poll, thank you. I see that we've got 100% answered, so I'll end that poll here. And
So
then
I was
let's,
gonna, you want to open it up to a Q&A, but I don't see any questions yet in the chat. But if you
yeah,
do want to ask some questions of Jay, hey, now's your chance live. Just put it in the chat box and we will ask. Um, I'm going to kick it off with one, Jay. I
okay.
love that slide where you were showing Amazon and Oracle and Microsoft, and you're showing the difference between the earnings
Mhm.
and the, capital expenditures. I don't know, it really jumped out to me. Amazon is really not pouring all that much more capital expenditure in regards to their revenue, but I was super curious at how Oracle it
Mhm.
kind of jumped out. And then if any of you are following what Oracle stock has done recently, not real well. So it's
Yeah,
almost like the market understood what was happening with Oracle, but you're still seeing some of these other the big players who are not overly exceeding their capital expenditures in comparison to revenue.
yeah. Yeah, Dell's another big one on that list too, right? And their stock has appreciated a lot in there where they're not spending a ton on CapEx, but their revenue is definitely accelerating.
Yeah, yeah. So I think I love the comparison that you did between the capital expenditures, which is, you need it when you're building
Mhm.
out something as new as AI, and that expectation, whether the revenues are going to be there.
Yeah, and it's funny. I heard this one analogy, right, with the AI trade and the build out, and similar. Think about it in the sense that the industrialists back in the day built out the electrical grid, right? They spent tons of money building that out because they were making a bet that once you lived with electricity, you wouldn't want to live without it, right? And
Yeah.
that's what these companies are doing. But that's not to say this market is going to go up in a straight line along the way, right? There is, and we're getting hit by news every single day, and it causes a big drop in the market, right? So there's going to be volatility along the way.
That was a great comparison. Yeah. Anybody want to live without electricity? No.
No, not right now. I'll tell you
No,
that with
oh
this
yeah,
heat.
not right now in this heat in particular. Exactly.
Yeah.
I don't know, Jay. I don't see any questions in the chat at this point.
Okay.
That means you did an awesome job and everybody understands.
Good. And we'll send you a one pager, guys. And we may reach out to you, get your thoughts on this webinar, right? We want to have that conversation with you. And we thank you for joining us. And again, we've got another webinar coming up on September 9th. This one's a little bit more specialized in terms of long-term care planning. Okay. We want to let you know what your options are out there. But again, we do thank you for joining this. And as always, if there's some questions that come up after this presentation, we'd love to help answer those for you.
Absolutely. So again, thank you everyone for joining, and reach out to us if you need anything. If you had questions you want to specifically ask Jay and pick his brains, I'd tell you that that's a good way to spend some time.
Oh, I see Chris did it. I see one question, Karen. Chris asked, what's going to happen with NVIDIA tonight? Look, Chris, your guess is as good as mine. Okay. I will tell you it's one of the most watched events. So, if history, we'll see, right? But it is going to could possibly be a market moving event, right? Um, but you usually get the big jumps when there's huge surprises. So, we'll see. We'll see. I don't have a crystal ball on that in that front.
Nobody really does though.
Yeah, no one does.
Right, right. Great. Any other questions?
I don't see any.
Okay. Go ahead, Jay, if you want to wrap this up. I just want to say thank you again, everyone, for joining. I hope you learned something you absolutely didn't know before. If you're in the AI trading, you've got AI related stocks. I hope this gives you some clarity and confidence about how much you own. And if you don't have that clarity of confidence, just reach out.
Thank you, everyone.